Uh-oh, another Bidenomics Recession alert. Bank lending approvals still at half of pre-COVID levels. Hello, this is Chart GPT Today. We'll take a look at banking and the growth of the credit markets in the banking sector today, and you kind of look at the growth, and it has kind of came up there through the after the COVID kind of spiked up with securities, but for the most part it kind of was flatlining, but now it's taking a big dive. So bank credit growth is slowing rather dramatically, and something that a lot of people have been looking at to see whether or not this is signaling a potential recession coming. But here's an interesting chart here. Actually, the net payments for interest are falling off a cliff here. So the amount of money being spent for interest payments is declining sharply. But you might say, well, that's probably logical because there's not that much bank lending going on, so that's probably makes a lot of sense. But part of the problem is that loan approvals have fallen off a cliff, obviously during the COVID, but they've only recovered by not even hardly half of where they were before the COVID. So a lot of stuff have recovered. Like employment numbers have recovered somewhat, pretty close to, maybe not on trend line, but at least it's recovered for pre-COVID levels. But loan approval rates have not. So that indicates that businesses just don't feel the need to get out there and borrow, or they're just not approving. The banks are just simply not approving the loan. And this is a big bank as well as small banks. A little difference there, but for the most part, there's not much that lending going on. And of course, this is the commercial lending. It's just fallen off a cliff here recently. And after the COVID jiggle, we call this COVID jiggle joggle on most of these charts. So that's interesting. So this gets you into this situation on this final chart here, where the net interest payments are declining, and yet the Fed funds rate there in the blue line is going up. So that means that in fact people are not borrowing money for a variety of reasons, partly because there's no business to borrow for, or they're just not qualified for these loans. So this is an indication that the economy has not really recovered, and the Bidenomics is not working as well as we're being told. Check out some of the reference links there in the description post link, and take a look at the AI on the website to discuss what does it mean when bank lending significantly slows down, and how that affects the economy. You can take a look at that and give us your opinion in the polling. Do you feel the Bidenomics is working for you or not? Don't forget to subscribe.